The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Wow. What a couple of days we've had, and certainly overnight. Overnight, you know that the futures were up 20 points. The Dow was up about 200 points. Came all the way back, rallied very strongly this morning early on, and then whoosh, there was that rug pull, and the market slid. The E-minis went down to 1871, round number low. Let me put that in, round number low, 1871, and this is something I'm sure a number of us had suspicions of, that there was really a very strong oversold condition here. But how to trade it? I decided that we have a couple of longs, we have a couple of shorts. Shorts have done fantastically. The longs, one of them we got in just recently as a dividend play, and it's up. It's up very strongly today. And I have to tell you that selectivity remains the name of the game, and I'm going to go through the whole scenario right now. Let me just quickly show you. This is a single leg A up. That kind of phenomenon has to have support about 1/3 down from the low to the high. The high, of course, so far is 1911.25, and that was a peak A, single leg A up. That will start to fail completely if the E-mini suddenly slides under 1890. It's 1903 right now, up 21. I would say that I'm going to make it not 1/3, but this is definitely a half. So underneath 1890, start to trade under 1890. That's a real problem. And then we just go sideways to down again. But in the meantime, this is a very nice rebound, because you've got a couple of stocks that are quite important. You've got Exxon rallying sharply. You've got General Electric. Why? Because General Electric is going to be moving to save money from Connecticut. I guess they didn't get tax benefits there, but Massachusetts seems to be giving them a real deal. So GE is coming down to the new south. It's the south part of Boston. It's the seaport area. Mayor Menino made a huge thing. It's really he's doing that. He turned, yeah, this is going to be very interesting. They've got the court. The court was built there. I always say to myself, what a fantastic view. Do you need to put a courthouse right on the waterfront? Prime, absolutely prime property. Well, it's there. It's going to be there forever. So it's all these new buildings. So at this particular point, that's the hub. The whole thing has moved now. You've got the Prudential area, which is going to get all these new skyscrapers. That's kind of I don't know if it's upper part. It's the part by the Boston Common. That area, Common going to the Copley, let's call it all the way to Fenway. That whole area is starting to be built. Now you've got the downtown across the water there. Huge buildings. This is a big thing for Boston. I mean, in the long term, it's fantastic. Now, my biggest contention has always been that I'm about to say in the United States, because it's something that I noticed when I came here, but I'm sure it's in other places as well, that prime property was never considered prime property. Anything could be built, anything, anyhow, anyway, and you got beautiful shoreline areas that were just really not planned very well at all. So we're going to see whether or not this whole shift of turning basically wasteland. You had Pier 4 restaurant. You had just a couple of things down there. Then it became the ICA. That's the Institute of Contemporary Art. Built a building there. Well, I don't want to talk about the architecture, but a whole bunch of buildings became very important as icons, and then all of a sudden you got more and more and more. So that's how cities morph into, in this case, Boston is now becoming a major city rather than a big college town. Very interesting. All right, that's one area of the socioeconomic spectrum that I'm going to be talking about tomorrow in Technical Friday. Another is the New England Automobile Show, annual show, is coming back. I think it starts today, going through to maybe goes through to Monday. This should be one of the most. I said last year that it should be most revealing of the auto shows that I've been to. I don't know if this is going to be the same as the Las Vegas show last week, or was it earlier this week? I'm not sure. But whatever it is, it's going to be very important because it's going to be telling me about the next phase. Is there going to be another phase that takes automobiles to this era of redundancy so that the front grille becomes as important for the car in looks as the entire car? And if you just bump it, it costs you tens of thousands to replace because there's a redundancy, excessivity. And if we still to go into that phase, it says that we could have another huge move to the upside. I don't know how. The charts are looking terrible, but this is something that I need to put into perspective because it's all part of what goes into my thinking in terms of the coda phase. All right, enough with that. The Dow is up 174 at 16,327. Yes, you remember yesterday I said we went long at 16,450. We had a fairly tight stop. We got stopped out. I said to subscribers, going below 16,300 would be a problem. And boy, was it a problem. And then the other thing was I was dying to go long today, but how could you go long? I didn't know where to go long. And if we had gone long, we would have got stopped out, and then it would have been looking fantastic, just great. So this is a difficult period. The right selective stocks and selective indices, and you have to play them individually. The bigger trend says, now let me go to this. Now I can start the numbers. The bigger trend says, here's the Dow chart, that I have a price time match, which says 15,942 by the 18th. Well, the 18th is Monday, and Monday is a holiday. I believe it's a holiday, right? Martin Luther King Day, I think we have off. I think last year we had it off. So if there's no day, it'll be the next day, Tuesday. Now, it's going to be really interesting because the time price match is one thing, but the chart formation that's unfolding is a little different to the smash that we had from 17,568 down to the low of 15,370 back in August. That was a 2,000 point decline. So far, we've not done that. We've had a much milder, it doesn't feel like it, but in price, it is only from 17,750 to today's low of 16,075. That's only 1,700 points. So there's still like, quite a lot of points to go. So, okay, back at the ranch, let's do the numbers. Dow's up 192 at 16,343. This second day of trying to rally is really important. I'm not sure we can get to yesterday's high of 16. Oh, why is the mouse moving around like that? 16 up, so I'll have to change mice. Okay, that's mouse here. Right there. 16,593. 593 is 250 points from here. I don't know if we can do it, but I think that today could be a really nice, strong day. And that says, I was thinking Friday would turn out to be a reversal day. I don't know how we can do that. We've had so many reversal days. I think we kind of use them up to a certain extent. I wouldn't be surprised now if we rally a little bit. So this is going to be very important. So we've got the Dow up 196, S&P's up 23 at 1913. The comp index is up 42 at 45.68. Gold is down 5. Bonds are down 24.30 seconds. And the dollar is up 28 cents. I'll be right back. Basil Chapman, Tiger Technicians Help.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So here we are. We're looking at the dollar. We're back. And so we're looking at the dollar, and the dollar is at 99.13, up 19 cents. Kind of stuck in this range. You see the way that the symmetrical wedge is closing in, closing in, closing in. So it says to me that there's still residual strength in the dollar. It's stuck in a trading range. And if we look at the TLT, it's peak C. If we look at the TLT, it's down 70 cents at 124.28. But look, this is a leg B with what I call an inside buy mode in the weekly chart. That's the 20-year Lehman T-bond fund. I've got a peak C in the 120-minute chart, which is suggesting that there should be another move to the upside, and that would be above 125.50. If it's tomorrow or next week, it'll be leg D in the daily chart, and it'll extend this leg B. But the real leg B that we've got to go for is 128.92. Can it get all the way to that level? Big question, that. All I can say is here I have to stick with the big theme, and the big theme has to be that within the context of my socioeconomic political stance, the Japanization of our bond yield seems to be continuing, and it should continue, because I think that in some ways there's going to be enough conflict in the economic reports to tell the Fed, hey, you've done what you wanted to do, right or wrong, it doesn't matter. You don't have to do anything right now. Theoretically, you want to keep on track for 2016 for automobiles to get to 18 million. How can they get to 18 million? They just did 18 million. It could. there are so many old cars on the road, and yet some of you might remember back in the 80s when we were talking about old cars, you knew they were old cars because they all had rust. You don't see rusty cars anymore, so you can really keep your cars for a long, long time. In fact, there's no real need to get a new car if your car is not giving you a problem. It costs you just a little bit every few months to maintain. To go to that expense. I sat in a new car recently, and I'm saying to myself, wait a minute. What is so different here? Yeah, you've got a lot of electronic technology, but I can always add that. What exactly is it that you're paying an extra, whatever, thousands and thousands and thousands for? Well, there are certain things that are happening, and that has to do with the safety. It has to do with other aspects. It has to do with the technology, and technology is really the issue. And if you look at the XLK, I did a little work on this the other day, mentioned it to subscribers, that the XLK is going to be really important because this is the S&P Select Technology Spider Fund, and it is holding okay. But if it starts to take out not the August, but the October low of 38.45, which is only 2.5 points away, it's at 40.05, that not only changes the weekly and says that the 36 level in the 200 period weekly chart is probably a target, but it says that arch formation in the monthly chart has to be monitored. Really, it's important. You start taking out lows. That wick, the Chapman wave Roman candle wick, just looms at you. Now let's go to something like the IBB, and this is really important. Why it's so important for a city like Boston to get GE to come in, because I can tell you this. The building activity in Kendall Square, in that whole area, it's all over the show, but I'm talking about the hub. For biotech, I would say to you that on any basis, if you listen to anybody who knows about real estate and they know anything about biotechs, they will tell you that the figures that some of these companies have been putting up to pay for their buildings, their new buildings, massive buildings, and what they're paying, especially to be close to MIT. Most of them are right close to MIT. Now they're going to have this liaison with the students. It's, it's a real nice tie-in. But when you start to do that, it costs you a bundle. And these buildings are going to cost them a bundle to maintain. It's going to cost them a bundle to fill them up. They're going to build bigger buildings. They're not going to build a small building for a lot of people. You want to build a building you can grow into. Well, they could be growing pains. So I'm watching it, and I'm saying the IBB, the iShares of the NASDAQ Biotech ETF, plummeted below the left side 284 low. It hasn't been able to turn around in any instance. A good comment in the den, I don't remember who made it. Zito in the den said XOM and CVX are trading like IBB names. Yeah, you suddenly got those oil stocks. So this is going to be a very important period, because as one sector fades from the scene, you've got to get something else to take its place. What is it going to be? So now let me just do this, because I want to look at, struck me as I was saying that. Yeah, so let's look at XOM. Look at that move, up 4.18%, up $3.17, 78.81. Congratulations to Fletcher in the den. He had mentioned, I think it was yesterday, that he was buying it, bought it way lower. Good. I mean, the den is a fantastic medium, folks. Just the comments, the advice, people's positions, what they're trading. Everybody's doing something a little different. It is great. So, yeah, this is I have to treat it as a balance. But it is really nice. Now, you might remember, for those of you who did my webinar way back earlier in 2015, you remember I said that I'm looking at Exxon. Then back when I did in September, when I did my, September, I said that Exxon is made, in my interpretation of I've now developed it as something completely different, of Elliott wave. There is a 5 at 65.55, wave 5, and I think that concludes its down move. I'm not saying it's a major move to the upside, but I am saying that the downtrend is done for now. Hey, wait a minute. It's gone from 65.55. It hit a high of 87.44. I would say that a 20 point to 30%, 28% increase is a pretty good increase. Then it pulls all the way back to 72.56. The 1st of No, the 11th of January, and now it's had a fabulous move up to 78. So what I'm looking at here is I'm saying if there is a rotation, and we're going to look at oil right now. We had an oil trade yesterday. We just got stopped out, and you know what? It's acting okay right now. I think it was too early for the oil trade. I think the glut in oil is really a problem. But anyway, USO is trading at 9.15, up 5 cents. All I can say is that it might be a little while. When a bear market starts in something, it can go on for a very long time. So a couple of things I want you to do here before we go to the break is let me just show you this chart, the 1 minute chart. I'm doing 1 minute chart because I believe if you can practice a technique and you can practice it in a shorter time frame, like a 1 minute chart instead of a 10, it means you get 10 chances to do the same thing as you would in a longer term. So this is just techniques that I'm busy working on, but it did make a peak E from the low that was made this morning in the E-mini right at the 1871 round number low, and it went all the way to 1911.25. I put my down arrow in, and now it's coming back, and it's giving back a chunk. So now we can look at the 120-minute chart. Remember what I said? I think it's the halfway point that really tells us the story. And look at that. Boy, was that a squeeze. I wonder how many people actually went long there. All right, we'll be back. Dow is now up 131. S&P's up 40. Nice action so far. Be right back. I'd love to take your calls.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. I had a couple of questions. One question is, let's see, SPX. How long do you expect today's rally to last? prior to open, SPX was on track for the worst month since May 2010. Can bull market recover from this sell-off? You know, when the factors come together, recoveries can really do a tremendous amount. And you saw this move. I mean, talk about a recovery. Look at this here. When we get to the 1 minute chart, look at this. Look at that sell-off all night. It was an amazing thing. From yesterday evening at 6:30, we got this large arch formation. In fact, I meant to draw it like this, large arch formation. And what I'd said to subscribers to my opening call this morning, I'd sent out an email. I wonder if I've got it here. You'll see exactly what I was talking about. It'll be a nice example. Snag it. That's it. Okay. Coming up right now. What I'd said was, I usually don't do this, but lately just it's been important to be able to send out charts that are very relevant. And I sent out a chart. Here it is. I'd shown that the, this is the 10-minute chart. Didn't I show the other one? Let me see if I can find that. 10-minute, did I send that out? Maybe I didn't send it out. Okay. What I'd mentioned was on, what I'd mentioned was that this is this is the 10-minute chart. Yeah, that's right. I showed the 10-minute, not the 1 minute. I said the 10-minute chart, the E-mini chart shows what might be a good example of a Chapman wave restart. That is, if the 1898's 1900 is achieved by mid-session. So this is what I said, that if in this particular example of a tremendous series of lifts off that keep coming back, and what happened is we went under it. That would have been a scary thing. But the fact that we came back so quickly and then we went above it is really important, because it says that this whole area here could become a base of support. And that's the way I like to look at things, just step by step. What does it mean and what is it doing? So we won't know yet. This is the 1 minute chart now. Showing you the large arch formation. My rule of thumb is when you go underneath the left side low, you've got to go real quickly back. And if the technicals improve enough to give you a buy signal that goes to a buy mode, you'll only have confirmation if you go above the arch highs that were made. In this case, it's right there at 1895. I'd said it at 1896 to 1900. That would be very important. Well, look what happened when we did that. We went power to D, instant restart, A, B, C, D, E, and you made an E top and you've come back. This is going to be very important. You go underneath your 1895, you start trading underneath it, you're giving back most of the gains. That's why I said to subscribers this morning, we're not doing anything. This is the time to just step back. I've got the chance that early next week we might get a low that is much more significant. If it retests that on the left side, I'm prepared to wait. And you know what? If you miss it at this particular point, there are a number of stocks that look ready to have a pretty decent rally. You can quite easily jump on that. So, okay, here we go. We've got Ulta, which is, there are a couple of stocks here that haven't quite finished their moves to the upside. Look, the weekly chart of Ulta Salon Cosmetic and Fragrances. Now, I've always believed, I could be wrong, I should check it out. I did check it out a long time ago. I haven't checked it out I shouldn't even say it then if I haven't checked it out. But here's my thinking. My thinking is that in products and clothes, accessories, anything that has to do with women's products, it takes a long time before they start to see deterioration in performance. In other words, I believe that cosmetics, etc., will find that women are buying cosmetics. That's the last thing that they're going to give up. This is just my thinking. It's got nothing to do with sexism. It's got nothing to do. It just has to do with rationality that says this is an important thing that I need to do, and I need to keep it up as long as I can at the best products that I can buy. That's my thinking. Okay, so here we are. It goes to an all-time high. Ulta Salon Cosmetics, I have no idea exactly what they have, but the chart looks fantastic. It goes to a round number low of 161. It closes at around number 185, around number 185, has a high of 188.48, closes almost at the high. And in January, we've so far made a lower high. And this is saying to me, I need to watch this closely, because if Alta is able to sneak to a new high above 188.48, that's a leg D in the weekly chart, but it also would probably start off giving me a daily that says I've got about a week to go before I must make some kind of decision. Is this going to be a major top? If it's in January, that extends leg D. But the technicals are superb in the monthly chart, not so much in the weekly chart, but the monthly chart. So this is one that I'm watching. The question was, any thoughts on the comeback today? Could it come back to the breakout? Well, as far as I'm concerned, the technicals are still very weak. I would have to say that based on the chart formation, the failure of the falling X so far, the failure of the falling X is lower lows and much lower highs and much lower lows. It says that until Ultra can get to 121.50 above the 9-period exponential moving average in the daily chart, you've got to be prepared to have some kind of a consolidation after such a huge move to the upside. And look, it had that back in November, the week of the 13th. It opens in the 174 area and goes down to 151. That's a big move down. And then it has a fantastic weekly chart the next week, an inside week, but a great week. And then whoosh, it goes all the way up to that peak C high. So I'm looking at this and I'm saying this is one of those in the category that says there could still be further upside, but you do have to have a little patience here. And that will fail. This will turn out to be a peak C minus if it trades at any point in January under 151. It's 24 points lower. You know, today's down 3. You never know how quickly these things can move. So I'm watching it closely. Now, there are other questions. That the question earlier on was BP. What do I think of BP? Well, BP is, I must get to that S&P answer as well. BP is bouncing nicely, but it really needs to get to the weekly 31.38 level. It's at 30.14, up $1.37, up 4.76%. Nice move, but it's done that before. It's even gapped up. It looked fantastic and then failed. So just be real careful here. If you are long, treat it as a short-term position that you have to see, because if it starts to take out, what did I say it was? I think I said the 20. If it starts to go into 29.50, 29.20 support, be careful, because then it looks like it could retest the lows. So this is not one of the better ones in the category. All right, integrated oil. Okay. Now to get back to the S&P question, when I get a chance to go to the auto show and when I get to look at certain aspects, I want to have a fundamental as well as a technical picture. The technical picture has deteriorated tremendously, but that's not the issue, because the technical picture can be replenished. You can get, if we had to close in the Dow 16,800s sometime in January, you will start to see a lot of stocks improve tremendously. So that's a big if, but in the meantime, I'm suspecting that we're going to have some kind of a test early next week, and then we're going to have a rally, and that's the rally that's going to be probably for me one of the most important, because we're going to see whether or not key stocks, and I'll show you right now, we're going to a break, but when we come back, and then that way I can at least answer Adam's question in more cogently, and so we'll do that, and we'll look at the VIX as well again for Julie. I'll be right back. Basil Chapman, Tiger Technicians Hour, Dow's at 131, S&P's at 13.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back, and what I'd said was we're going to look at a couple of things here. The TVIX has been a very nice... Excuse me. Let me just have something to drink here. TVIX trading at 926, down 29. What I'd said to subscribers, because we use this as a trading vehicle periodically, if it goes under 9 and holds there, you can see a more sustained move to the upside. If I go to the VIX index itself, which is what most people look at, the VIX is trading right now at 24.46, down only 76 cents. Holding above the 9-period moving average of 23.08, and getting so close to trying to make a peak D. I have to tell you that this is 14.45. I just need to correct something here that I meant to do before. 14.45, and that was on the, I think it was December the 7th, 24th. Yep, December the 24th. 12, 24, 15. So from the 1445 low that was made on the 24th of December, you've got peak A, peak B, peak C. You don't have to go to D's in the VIX because it's an emotional, it is a sentiment indicator. It's subservient to other things. Look, failed at a peak C minus at 53.29 back on the 24th of August. I would venture to say that the news today with China and just nervousness generally is way higher than that crazy Monday that saw a 500-point decline, and then another 500-point when the technicals kicked in. That is when the computers all kicked in with their programs, and then the recovery, the 1,000-point recovery. But to my eye, what I'm looking at here is far more important, and that is the weekly chart is holding for the, well, it was right on there. So this is the second week, and tomorrow's Friday. We're going to have to have a spectacular move to get the VIX index between now and Friday at 4 o'clock under 20.73. Let's call it under 20.60. And that would be the first time in 3 weeks that the VIX is closed underneath. But holding here, so the selling is rife. There is a lot of there are a lot of things going on here that are negative. And therefore, positions on the long side have to be very selective, probably in the most oversold sectors, but you've got to be real careful. All right. And here's the other aspect. The monthly chart, we're only exactly halfway into the month. And this is the first month in quite a while that we've held for this long above the 200-period exponential moving average in the 19s, and it's at 24.29 right now. So all of these things say be careful. Now, so that's the VIX index. I make it a rule. In the 20s and the mid-20s or higher, you can expect to see triple-digit down days with spikes to the upside occurring. But if the VIX doesn't plunge on those big spikes, it says selling is still there. Be careful. Make it clear. Under 22 it's getting better. In the teens, it's way better. In the 16 to 14 area, it's buying pressure, and the market will be going higher and higher. All right, just make it real clear. In the 30s, you're going to see tremendous selling. Now, I just want to quickly go for those of you who are trading. Look, here's the reversal. We went lower. We went to. You remember I said that the key level to watch will be 1895, the breakout level. What's the low here? The low is 1894.50. So now you've tested it. And in fact, you've got a perfect left side, right side price time match. Just want to do this because I know a lot of you are doing intraday trading. I want to give you a little bit of advice. So we've got that. Let me just make this to the right side, right there, new parallel, and you move it to the right. And what do we have? Exactly to the exact breakout. Look at that, right there. I'm going to make that red, pink. Okay, and I'm making a dash so you know exactly what I'm talking about. Now you can have another bounce. And you held, and that means that this is the level you got to watch for. This is peak A, peak B, retracement failure mode. You remember? I can go quickly and put in a cup formation. Let me just do the technique that I've been doing because I never had time to do it. Just give me 1 second here. This is not a technique I'm going to discuss until I've gone weeks and weeks. I've already gone months and months. So I need to go even longer before I can even talk about it publicly, but I need to put it on here because it's part of what I'm working on. So this is one. This has some semblance to Elliott wave, whoops, but it really, it's something quite different. And as usual, it's a technique that I heard about, looked at, started working with, found it a little fuzzy for me, and then said, it doesn't quite make sense for me. And I've refined it to the point where it actually is just the gesture that I keep. So in this particular instance, I can't put an up sign. I can only do this, and that will be brand new. Should put my Chapman wave notation. I just don't have time. Maybe one day we'll have a whole hour in which I'll just do these techniques, and as I'm doing it, I'll discuss them. So this is A, B, and usually what I call them is gray A and a gray B because it's got that entire left side as resistance to take out. So this is a retracement failure mode. It's not just, it's descriptive. It isn't a comment on the character. It's just saying you're trying to get back again. All right, enough with that. I could do other things, left side, right side, price, time match, etc. But the question that Adam had, I just want to give him a little better answer. I hope to give him even a better answer by early next week. But in the meantime, I'm just going to say, you can only go one step at a time. The arch formation with a Chapman wave Roman candle in the S&P, I wonder, is it easier just to do the SPY? Yeah, let me go to the SPY because most people use the SPY rather than the S&P. At least this is what my thinking is. You see this major uptrend line in the SPY? We haven't broken that yet. So that gives us quite a bit of room. It gives you all the way down to a close below 179 would be a problem because then you'd have the H that becomes the dreaded H, and that Roman candle will be decisively taken out. As it stands right now, even holding in this area would normally suggest to me that going halfway into the wick, which is what we've done with the S&P, makes 182.48 target. I'm going to make that a statement. My target for the S&P in this down move says that there's a really good chance, because of where we are right now, that the 182.40 low of August will be tested and probably breached to the downside. Okay. Does that mean that this major support line is going to be taken out? That's the big question. That is a huge question. There are a number of other questions. And once again, I don't want to sound Pollyannish. My contention has been, at least for a couple of weeks, but absolutely from last week, that the trend is to the downside. It is strongly to the downside. And until a whole bunch of factors come into place, why is there a frog in the throat? Let me just... And until there is a decisive break, either of this trend line, I want to talk about the monthly chart, or I get signals that say so much bearishness, I have to go bullish because of the technical indicator. I don't want to commit to the upside until that happens, all right? So let's leave it for now. I'll be back. Dow's up 189. Basil Chapman, Tiger Technicians Hour. Get rid of this frog in the throat.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. We're back, and I looked up where the expression "frog in the throat" comes from. I decided that it's an expression I probably will not use. I will probably not use again. All right, that's that. I have a in my throat. That's it. So the Dow's up 181, S&P's up 18. In this last segment, what I'm going to do is have you look at, so the SPY is really important at this particular moment on a short-term basis because it's had a move down that is an equivalent of a leg G/C. I'm thinking that there could be a bounce and then some form of a retest on Tuesday or Wednesday, maybe break the low, or we're going to see a week and a half to 2 weeks of rally, and it's just going to be a slow grind to the downside. And that gives me the other technique of a left side, right side price time match, and that takes you to like February sometime. So the weekly charts are going to give us a lot of important information, but it's that monthly chart that's going to be absolutely critical. And the levels that I discussed are the levels that are very important. I spoke about the VIX, spoke about that. Next question was GE. This is a good question. GE, not E, GE, at this particular point is up 50 cents at 28.74. Hit the 9-period moving average of 29.14. What was the high? 29.14. That's exactly the 9-period exponential moving. You know, how these moving averages work is just an incredible thing. The technicals are still very poor in GE. I think that we do have a weekly signal that says it's probably going to be a sell signal tomorrow at 4 o'clock. That there could be a rally, and that we're looking at time of maybe 3 to 5 or even 6 weeks of GE consolidating, and that I don't want to say the worst is done with GE, but because there's a moving average of 25.06, and it made a low of 1937. If you go 1937 to 31.49, double check, 31.49. So that to do that quickly is 12, right? 12 points. So 12 points, you could give back 6 points. So 6 points takes you from the 31 to the 27s. Yeah, I don't see any reason why GE couldn't have a pullback now. It deserves it. The big question is, what do we do about the monthly? You know, I can't do anything about the monthly. I have to wait for the month to finish. January has to finish, and then I can give you more important. You remember what we saw in the 1 minute of the same pattern? Look, spike up. Look what's happened. Now we've gone to a leg C in the 1 minute chart. Leg C in the 1 minute chart, and let's go to the 10-minute chart of the E-mini. E-mini is, this is that strong leg A. You have to go all the way to a new recovery high of 1911.50 to start leg B. It could be done. There's enough selling pressure that's being accomplished over the last few days. So, okay, let me do this. We're about to wrap up. I'll be interviewed by Tom later today. But most importantly, let me just do a couple of things. The Dow. The Dow is having a pretty good candle, and this is a D. Now, in the Dow, at least has made a D in the leg down in the daily. And that says, yep, now you could have a pretty nice rally. Where could that rally go? Well, it's at 16,354. A rally of 160 points takes it to a rally of 260 points takes it to the 16,600 level. And the 16,600 level is, in fact, the 9-period exponential moving average. You're all the way up at 17,045 in the weekly chart. I suspect that we've got a rally coming, and that rally could go into early next week. Maybe it doesn't have that price time match. But more importantly, between 16,600 and 16,780, let's call it 16,800. That's going to be an area for me that is so important, because if the Dow holds there, you've made a V-shaped pattern. Then I have to do an analysis of all the different Dow stocks, etc., and say, what's happening? Could that be a low of significance, or is just a low and not the low? So all I can say is that we deserve a bounce. The bounce is unfolding. The bounce should go a little higher, and we're going to be doing more of an assessment in Technical Friday tomorrow morning, and we'll talk about many other things.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.